A warm welcome to Inside India. I'm Manisha Tank. Let's get your headlines this hour. Gold prices finally crack $4,000 for the first time after a blistering run as investors flock to traditional safe havens in a highly uncertain environment. The British Prime Minister Keir Starmer is leading a 100-strong business delegation to India as the two countries look to shore up trade ties. And government spending may boost India's economy this year, but the World Bank warns tariffs will start chipping away at that growth next year. Hello, wherever you are. A happy Wednesday to you. It is Inside India. Good to have you with us. Let's get a look as we crack on at the Asian markets. And remember, South Korea and China markets, they have been closed the last few days and continue to be so for the Mid-Autumn Festival. But it's a mixed picture that's emerging in the region so far. The Hang Seng actually opening the session, reopening after the festival, with chip stocks in particular being impacted by a crossover overnight from the US. More and more asking about the stability of the AI chip boom. So across the board, it was red for Hong Kong. But otherwise, we also had surprising news from the Reserve Bank of New Zealand this Wednesday. The benchmark interest rate there being trimmed by 50 basis points to 2.5%, 25 basis points was what was expected. So we'll keep an eye on these markets for you. But so far, a bit of a mixed start in Asia. The Indian market's also coming online in about 45 minutes. Let's get a look at what Gift Nifty futures are indicating. We had an overnight close of 25,108. And so we are pointing to a higher open, but still, this is below the 52-week high, which was 25,669, still stable above that 25,000 level, which is not where we were at the beginning of the week. So it's a big week for the Nifty. Now, big news on the economic front. The World Bank has downgraded its growth outlook for India next fiscal year to 6.3% from 6.5% due to uncertainty stemming from US tariffs. But it has also lifted its forecast for the current fiscal year to 6.5%. The United States has imposed a 50% tariff rate on most exports from the South Asian nation. That is among the highest level for any of Washington's major trading partners. The high levies are hurting key sectors such as textiles, jewelry, and agriculture, and they affect about $50 billion worth of goods. In other news, the UK Prime Minister Keir Starmer is kicking off his two-day visit to India today. He'll be promoting a recently signed free trade agreement, which was sealed back in July. The deal includes tariff cuts on goods like textiles, cars, and whiskey. He'll also take part in the Global FinTech Festival that is underway right now in Mumbai, and we have been showcasing it already this week. We're in fact going to have a guest later from the event. That'll be later on this show. So don't miss my conversation with Germany's head of digital finance, AI payment services and cybersecurity, Friederike Lange. Right, let's get on to gold. It continues to shine brighter and brighter, in fact, both spot and COMEX gold hitting 4,000 for the first time. The precious metal has been going from strength to strength this year, up over 50% year to date, its biggest rally since the 1970s. A lot of money is going into gold ETFs. Look at the SPDR gold ETF that's also up over 50% year to date. It's seen inflows north of $13 billion in the last month alone and a record $60 billion net inflows so far this year. This all according to the World Gold Council. Well, David Newhouser is CIO at Livermore Partners. He joins me now to dig in a little bit deep and find out what's going on here. First of all, are you surprised by this move? I mean, this is a huge shift that we've seen in recent months.
Yeah, hi, good evening. No, I'm not surprised in the least by the move. So, our hedge fund has been very bullish gold for now several years. So, when we've had discussions before with CNBC, dating back a few years, gold was down around $1,700–1,800 an ounce. Today, this evening, in fact, we're seeing spot prices breach $4,000 an ounce, and we think that the buoyancy is going to continue for a long time to come.
Yeah, offline, we were having conversations where someone said, there was a time where we thought 3,000 was a lot. We're breaking through 4,000. How high do you think this can go?
Yeah, so again, for Livermore, I mean, earlier, I think it was late last year, we were thinking that bullion, was going to breach 3,000 in 2025. That happened, several months ago, but since then, it's accelerated its move, and we've seen it up over another 30% to 4,000. So my belief is, look, gold has tremendous potential to continue this bull run for not just 2025, but obviously 2026 and beyond. And a lot of it's just simply due to the debasement trade, where fiscal and monetary policy is starting to unnerve investors and central banks around the world. As economies become more polarized, debt becomes a major issue. And even today, I think gold has still, tremendous potential for its future. Where do I think it can attract? I mean, obviously 5,000 is a big number, but I think even if you look out the next few years, seeing gold trade somewhere around $6,000 an ounce is not so far away.
So you say few years, not so far away. You willing to call a time frame on it at all to get to 6,000?
I think for it to get to 6,000, it's either going to be a slow grind as inflation stays relatively high and fiscal stimulus continues, or it's going to be something else that's going to unnerve the global economy or markets. So, for example, you touched on earlier the AI trade, which has been, on such fire as well, and you've seen technology stocks and AI drivers lead that charge. So for me, I think if there's any issue as we build out that growth, where you see some of these companies start to retrench, then I think a market in turmoil will most likely lead to gold actually find even more demand and see a much sharper move higher.
Yeah, absolutely. In fact, you anticipated my question. I was going to ask about that because this conversation is coming up more and more about the AI boom and just where we are on that curve. I'm going to park that for a second. I want to talk about some other macro basics. We have this stabilization of oil prices. So energy, we're looking at even the US President Donald Trump pushing for more affordability on that front. We're also looking at a US dollar, a weaker US dollar. These are some of the other factors that are around. Are they playing into this gold price story also?
Not so much on the oil price. I mean, the oil price, in looking at oil, I think it's actually relatively cheap so for Livermore, again, we think it's more of a value trade at this point. It's at a low price point. I think when you look at the gold to oil ratio, it's extremely blown down. So the viewpoint is, commodities are in a super cycle today, we feel gold at some point in time with lack of investment over the last several years. And if demand continues its increase, that actually oil can be a catch-up trade for the markets. So I think that has potential, but it still might be a few years away on the oil side.
David, I want to pick up on these gold-backed ETFs. So this has been extraordinary. They recorded their largest monthly flow in September, according to the World Gold Council, and that resulted in the strongest quarter on record. And if you look at the regional breakdown, it's really interesting to see where those inflows are going. The US, Europe, a couple of examples here in Asia, India, one of the biggest in that market. What is happening on the ETF side? And is this another very strong part of the story?
Oh, for sure. I mean, so you're seeing these big sharp moves because obviously you're seeing some of the more passive investors out there look for ways they can play the move in gold. Again, as we see, changes to fiscal monetary policy that look like it's going to cause the U.S. dollar to lose its potential reserve currency status at some point in time. As that becomes a nerve, that trade, you're looking for, again, this is not a U.S. trade. This is a global trade. So, investors are looking for ways they can obviously invest through that as ETFs, and you're seeing more and more of that here lately.
Yeah, you mentioned the geopolitics as well. Like, there are conversations in the Middle East that are still happening around what is happening in Gaza. We have this ongoing situation between Russia and Ukraine. There's a great deal of uncertainty out there. Investors have been chasing yields for a long time, so we have an uncertain geopolitical picture where nothing is resolved. And we're also looking at an interest rate trajectory where we have minutes of the last FOMC meeting due to be released later this Wednesday in the US. It's going to be very interesting, especially when the Fed is flying blind, with the government shutdown there. We don't actually have government economic data to pour through. How are all of those factors coming into this story? I mean, you're talking about 6,000 down the line. But one wonders whether that could be even more accelerated if we don't see resolutions on the geopolitical side, and thinking about the US government shutdown as well, a resolution there.
Yeah, I think where I see that, where you're coming from in terms of the data, right? You said is the Fed is flying blind. I think the key is we're starting to see, some labor market softness that's being more pronounced here lately. So I think that's being built into the market, thinking that there's going to be some demand shocks to the labor force. Coupled with that, we're expecting tariffs to feed into the economy further into late 2025 and 2026, which should cause the inflation story to remain hot. So with that, again, I think you're looking for a miscalculation either by the Fed or government. And that's where I'm saying, like, you can see this debasement trade start to really take hold. And with that, gold would find its footing even beyond 5,000 potential. But that's where it is. It's the idea is that, whether it be politically, whether it be from a macro standpoint of the economy, there's a number of situations that are brewing globally, I think, that is feeding into gold being the best asset class of the year. So, but beyond that, I mean, I think the other theme is AI, of course, and we've seen this massive growth and a massive run for technology stocks, and that could continue for years, or it could be abruptly halted. And my view is that at some point, I think the rubber is going to sort of hit the road as far as the CapEx boom, and when that happens, we're going to see a pretty sharp and steep correction within the technology space. And with that, again, you would see even more acceleration to the gold trade.
Well, this certainly seems to be playing through. My last question to you, David, is around these comments that we got from Ray Dalio overnight, calling for a 15% allocation in gold. And then you had Double Line Capital's Jeffrey Gundlach saying 25%, far higher than traditional portfolio allocations. Are these gold bugs vindicated then? It sounds to me like you might agree.
Yeah, no, I agree 100%. I mean, so like I said, we were early on the call with gold, where a lot of naysayers were saying that this wouldn't occur. We wouldn't see gold, rally as sharp and severe, similar to the 1970s, when you had a stagflationary scare. So the reality is, the world is much scarier today. The debt for the global world is much larger today, especially as a percentage of GDP. We're also running these huge budget deficits as well. So there's really no stopping the train when it comes to debt. The world is just awash. So with that, again, you're seeing debasement trade take place, and where that people are looking for how do they hedge themselves. Actually, what is the reserve currency? And it's flocking to gold. So you're starting to hear that more and more from some of the top money managers in the world. But I think only now you're starting to see investors really understand that this is a key dynamic to their portfolio, and thus that's why you're seeing the move that's occurring in front of us.
David, it's always a pleasure. Thank you so much, David Neuhauser, joining us from Livermore Partners. All right, coming up here on Inside India, we're going to shift gears to the EV space as Tesla unveils more affordable models to compete with rivals around the world. And we'll have more views, more analysis with Frost and Sullivan. It's all happening after this. Stay with us. A warm welcome back. You're watching Inside India. I'm Anisha Tank. Thanks for being with us. Now, the EV giant Tesla debuts more affordable versions of its popular Model Y SUV and Model 3 cars, but its shares have skidded more than 4% overnight. This is investors were hoping for updates on other new products like the next-gen Roadster that CEO Elon Musk has promised for years. CNBC's Phil LeBeau has the details.
As expected, Tesla has rolled out two lower-priced models as the company tries to offset the impact of potentially slower sales with the expiration of $7,500 federal tax credits for EVs here in the United States. So you've got a new lower-priced Model 3 now coming in at basically $37,000 and a lower-priced Model Y coming in at essentially $40,000. Both of those price cuts, by the way, about $5,000 less than before. So what are you not getting for $5,000? Or what has Tesla said we're going to strip out of these cars so we can offer it at a lower price point? A lot of it is things like taking away power steering or the ability, I shouldn't say power steering, the ability to adjust the steering wheel. And now you'll have to do it manually, or the side mirrors, the rear vents are now manually adjusted. Those are the kinds of changes, no more ambient lighting on the inside of the vehicle. Those are the types of changes that Tesla has driven into these two vehicles. Keep in mind, as you look at Tesla sales in the United States, they have been growing from Q1 to Q3, largely because the Model 3 and the Model Y, they drive about 96% of the sales in the United States, and they are the entryway for many people into electric vehicles. Tesla wants to give those people a chance to get into a base model for less than $40,000. Albeit, most people don't buy a base model. They usually add on features. Nonetheless, Tesla cutting $5,000 off the Model 3 and the Model Y. We'll hear from Tesla CEO Elon Musk on October 22nd. That's when the company reports its Q3 results, again after the bell on October 22nd. Phil LeBeau, CNBC Business News, Chicago.
Interesting stuff. Well, let's compare Tesla's year-to-date performance with Indian automakers. It's important to note that Tesla only opened its first India showroom back in July. So on a broader picture, so that's a narrow picture, but the broader picture, the biggest winner appears to be Maruti Suzuki, followed by Mahindra and Mahindra, both up double digits. Tesla also in the green, but the biggest loser on this board is Tata Motors, which is down nearly 6% so far this year. Well, lucky for us, we have someone here who can talk to us a bit more about it. Vivek Vaidya is partner at Frost & Sullivan, and we're going to dig a little bit deeper on this auto story. I think it's really interesting that they're looking at price point. India obviously is going to be a huge market for Tesla, but still a relatively new entrant.
Correct.
What does it look like right now? How are they doing?
So Tesla, to the best of our reports that we see, they have delivered about 600 vehicles. They are well on the track to deliver whatever 2,500 vehicles that they intend to sell in India, which is, I would say, which is a good entry point in India, but it is very far from calling them a very serious player, because the market structure, the existing players in India are quite different than what Tesla is.
Yeah, I mean, actually, those numbers sound really modest to me when I think about, Tesla entering other markets. And usually when Tesla enters a market, it's with a gigafactory.
Correct.
And it's with a lot of fanfare. So what do you think this relationship between Tesla and India is going to look like?
So as of now, they are just importing CBUs and they're selling the completely built units. So far, we don't know where and when the gigafactory is likely to come in. And so far, we also don't know whether they are looking at India as a production market or just a CBU market. So far, all of these things are up in the air. So it's very hard to see what are their long-term plans as a, making a presence felt, making sure that the customers have choices, encashing on the brand name that Tesla has built over globe. It's a good entry point, but we really need to see in long term what are their plans before we can comment whether they are successful or not.
So the Indian EV consumer, what do they look like? What sort of budget do they have available to them? Because I think this is a really interesting part of the conversation, and it might explain why Maruti Suzuki has been doing very well, Tata not so much. What's behind some of that?
So I would say Tesla lies on the cusp of two things. One is EV and the other one is luxury. So Tesla is, whoever buys Tesla will buy them for their brand value, for their flaunt value, irrespective of whether it is driven by EV or something else. Of course, it's driven by EV, but the major attraction for Tesla is it's Tesla. I think that is something that we should have at the back of our mind. And therefore, I would never ever compare Tesla versus Maruti Suzuki in any of the conversations that I'm having, because these two are bought for two completely different reasons. You may have the same customer who's buying both, but the purpose for which this particular vehicle is bought is completely different. And that's why I won't really compare Tesla with any other brand maker unless they become a well-entrenched player. They have a factory, they enter into multiple cities, they start targeting different customer segments. Till then, they will remain that niche luxury player who are attracting customers from, rich customers from Mumbai and Delhi and other places.
Okay, so very much a have one if you can type of scenario. Okay, I think obviously what is very interesting, and I'm just sort of looking at global numbers here. So in the UK, BYD, the Chinese automaker, EV automaker, 880% increase in BYD sales there. It's an incredible number. And BYD is storming in many other countries. Obviously, there are restrictions right now on the Chinese automakers or the Chinese EV makers in India. If that were to change, how could it shake up this market?
So structurally, this market is built on smaller cars. For over decades, there was a tiered excise duty structure which favored smaller cars. When I say smaller, for the global audience, it's like 1 liter, 1.1 liter. That's the fastest moving, the largest selling car in India. So what we are talking about is a market that is fed with cheaper, cost competitive vehicles which are extremely small, and therefore they are available at a very substantially lower price points. So Tesla naturally appears to be a luxury vehicle, and that's where it will stay. I don't think they can compete ever with Maruti Suzuki and even Mahindra for that matter, who have cars in the lower price bracket. So I think they need to ensure that they peg themselves correctly against the luxury players like BMW, like Mercedes, and stay there. I think that would be the best way in which we can compare Tesla's performance in India.
But very briefly, if the Chinese automakers could get more access to India's market, that I assume would be a huge shakeup.
Yes. Theoretically, if they get access to this market, I think they have products that are dazzling the customers world over. They're beautifully styled, they'll work very well. However, there are some structural challenges in India which will prevent them from being omnipresent. Those being the supply of electricity, availability of charging network. Mind you, India is not a electricity, it's an electricity deficient stage. You know, they need to produce a lot more electricity than what they consume to make sure that they catch up with the demand. Demand outstrips the supply.
I'm glad that you got to that, because I want to fit this in before we have to wrap this up. At the end of the day, it's all very well to say India is this wonderfully primed market for EV makers. But at the end of the day, if you don't have the charging infrastructure, you're literally not going to go very far.
And that is going to be the single biggest constraint. So we saw Tata Motors sales shares have dropped. They went up because they were selling EVs, but at some point in time, the structural and the infrastructure bottlenecks are going to catch up with you, because you can't really, the electricity grid is not robust enough to handle EVs in very large numbers, and therefore they will remain as vehicles that are in pockets, that are in rich neighborhoods, and they just go around nearby because the presence of charging infrastructure across India is very far from where it should be.
Absolutely. Well, it's definitely a story that's got legs. There's going to be more and more development, and we know that this is a direction that India wants to go in. So, here's to another day. Yes. Vivek Vaidya, thank you so much for joining us from Frost & Sullivan. Okay, well, coming up, we have lots more. A pivot to trade, in fact. India and the US are set to remain in active dialogue as trade tensions continue. So don't miss a slice of CNBC TV 18's interview with Commerce Minister Piyush Goyal after this. Stay with us. A warm welcome back. You're watching Inside India here on CNBC. Some of the stories we are keeping tabs on outside of India. First up, we are 1 week through the U.S. government shutdown. A White House memo revealing that not all federal workers on furlough are entitled to receive back pay once the government reopens, despite a 2019 law requiring them to do so. U.S. President Donald Trump responding to this memo saying, quote, "It depends on who we're talking about." He has previously threatened mass firings if Democrats cannot come to an agreement on the funding bill. On the tariff front, the World Trade Organization has significantly downgraded its global trade growth forecast, citing uncertainties from U.S. tariffs. Growth volume is only expected to grow by 0.5% next year, compared to previous estimates of 1.8%. That was made back in August. But things are looking positive for 2025. The WTO actually upgrading this year's trade growth outlook, thanks to major front-loading of goods globally to avoid these tariffs. And U.S. President Donald Trump has welcomed Canadian Prime Minister Mark Carney to the White House for Carney's second visit in 5 months. The Canadian leader comes under pressure to address U.S. tariffs that are hurting its economy. CNBC's Eamon Javers reports from the White House.
Something of a convivial atmosphere at the Oval Office today for the Mark Carney visit to President Donald Trump, as the two leaders sought to paper over some of the tensions between the two countries that emerged during the course of the year on the issues of trade and tariffs, and of course President Trump's joke, or maybe not so much of a joke, about taking on Canada as the 51st American state. Ultimately, though, the president said today that the tensions between the United States and Canada are simply a matter of basic business competition. Here's what he said.
The problem we have is that they want a car company and I want a car company, meaning the U.S. wants a car company, and they want steel and we want steel. You know, so in other countries, they're very far away and there's no problem. You can compete and you can do. We don't like to compete because we sort of hurt each other when we compete. And so we have a natural conflict. It's a natural business conflict. Nothing wrong with it.
No indication from the White House after the meeting whether anything in particular was agreed to, but certainly leaders on both sides of the border will see this as a positive meeting between the two countries and maybe a step toward additional trade agreements. We'll wait for any details of those agreements to be announced by both sides. For CNBC Business News, I'm Eamon Javers at the White House.
Now we are counting down to the market open in India. Let's have a look at how we're shaping up, and looking pretty much unchanged for the open there. The holding above that 25,000 mark, that has been the case now for more than a day, but we're keeping an eye on these numbers for you. Indian markets opening very soon, in just over 10 minutes or so. Okay, we are also on IPO watch in India. LG Electronics India's $1.3 billion IPO has drawn strong investor interest, fully subscribed on its first day of bidding. NSE data shows bids worth $957 million, led by non-institutional investors who snapped up more than double the shares allocated to them. Retail demand reached 81%, while institutional investors took up roughly half of the shares reserved for them. WeWork India also following suit. Its $338 million IPO was fully subscribed on their last day, on Tuesday, driven largely by strong institutional demand as retail investors remain cautious about the firm's steep valuation. According to Reuters, at the top of its price band of 615 to 648 Indian rupees per share, the IPO values WeWork India at roughly $980 million. That is significantly higher than recently listed peers like Indicube Spaces and SmartWorks. Shares are set to begin trading on the Bombay Stock Exchange and National Stock Exchange on October the 10th. In the meantime, the World Bank has downgraded its growth outlook for India next fiscal year to 6.3% from 6.5%, all of this due to uncertainty stemming from U.S. tariffs. But it has lifted its forecast for the current fiscal year to 6.5%. With that as a backdrop, Indian Commerce and Industry Minister Piyush Goyal sat down with CNBC TV 18's Parikshit Luthra on the sidelines of the FTA talks in Qatar. He addressed the World Bank's forecast revisions and said that India and the United States continue to remain in, quote, active dialogue and vows a resolution to trade issues in the near future. Here's a slice of that conversation.
If you look at the first quarter's growth figure of 7.8%, and the indications are that this quarter also will go well, particularly given that GST simplification and rationalization has given a big boost to domestic spending. My sense is it's very appropriate that estimates have been revised upward, and we may possibly even land up doing better than that. As regards the tariffs, I can give you one data point. Tariffs have been in play for some time now. But despite that, our exports in the current year, in the first 6 months, are up by 4 to 5%. So India is a very resilient economy. The Indian businesses are not overtly dependent on exports. And I'm sure we'll be able to also come to terms and resolve issues with the United States in the near future. In any case, when we had launched the bilateral trade negotiations, we were looking at a fall, October-November deadline. India is more focused on a very proper WTO-compliant, focused agreement with the US. And I'm quite confident that even next year, we will probably do better, and World Bank will be required to once again upgrade next year's forecast as well.
So what is the current situation of our trade negotiations with the US? You spent a considerable amount of time there. Minister Jaishankar, he was speaking at an event in Delhi where he said we are yet to find a landing ground in the negotiations. How would you describe the current state of play? Where are things right now?
We are in very active dialogue, and there's a deep understanding of each other. I'm quite confident that we will be able to resolve the issues that are on the table and find the landing zone in the near future. As long as both countries and the negotiators respect each other's sensitivities and agree on a fair and equitable, balanced trade agreement, which will also help to balance trade deficits in the long run. I'm sure this will be a very positive development, which we are all working towards.
India's Industry and Commerce Minister Piyush Goyal speaking to CNBC TV 18. He also spoke about the much-anticipated free trade agreement with Qatar and if there are more FTAs with Gulf nations in the pipeline. Have a listen.
Well, as regards LNG, Qatar helps us in our energy security in LNG with their substantial sales of LNG to India. We've entered into an extended 20-year contract until 2048, which will provide the necessary stability to our LNG demand and requirement. We also believe that with 800,000 plus Indians working in Qatar and with an economy which is also growing, Qatar offers opportunity for both goods and services export. We are also exploring third country exports from Qatar, particularly of services. So collectively, we are going to work towards doubling the trade from $14 billion to $30 billion by 2030. And most of the growth will come out of non-energy or non-LNG exports.
So you mentioned that we may possibly have an FTA with Qatar by third quarter of next year or even earlier. How many more FTAs with Gulf are in the pipeline?
The Oman FTA has been finalized and we are hoping to close discussions on the Oman FTA soon. One more country is in active dialogue and wants us to initiate discussions for an FTA. We are waiting to get some bandwidth since I already have teams busy with the EU and Chile, Peru, US, New Zealand, Australia for phase 2. ASEAN review is going on. So right now it's a busy season on FTAs.
Right.
Piyush Goyal there. Speaking of bandwidth, India is working to upgrade its semiconductor sector, and Tamil Nadu's State Industries Minister T.R.B. Raja has told CNBC TV18's Shireen Ban that the country needs to work not just on fabs, but on upgrading talent as well.
I think India needs fabs for the north of India, and then purely for national security matters, we'll need fabs in the south also. I'm sure all the national security experts will understand this part. That said, any state in south, this is my pitch for south of India itself, we just need fabs in south of India. That said, every time we pull in a fab, Delhi, it goes to Delhi, and there's a take diversion board there, which goes to just 2 states. I don't know why. But then, now that said, we don't have a problem. We don't have a problem because we have a problem of plenty. We have more. There's more coming, and as we choose, I think someday Delhi will see the quality of the argument, and they'll say yes to my request. But that's it. Till then, we're working on a school of excellence. We're working on a school of excellence because all these fabs coming not just in India, but across the world, they need talent.
Tamil Nadu's T.R.B. Raja speaking there. Now, AI startup Anthropic is set to open its first office in India next year as it looks to tap on the country's growing AI appetite and tech talent. The firm, backed by Google and Amazon, will set up its new office in Bengaluru and begin operations early in 2026. It would serve as a second office in the Asia-Pacific region following its recent expansion into Japan. India is now Anthropic's second biggest market for its large language model, Claude. Right, we're counting down to the market open in Mumbai. Let's check out where we are with that. There you go. We're back in 2 with more. Hello and a warm welcome back. You're watching Inside India. Good to have you with us. Now, the UK Prime Minister Keir Starmer is kicking off his 2-day visit to India today to promote a recently signed free trade agreement, which was sealed back in July. The deal includes tariff cuts on goods like textiles, cars and whiskey. He will also take part in the Global FinTech Festival, which is underway right now in Mumbai. And with that, let's return to day 2 of the GFF. Our next guest is here to discuss the next frontier in payments and digital money and the risks surrounding that theme. Dr. Friederike Lange is head of the Digital Finance Payment Services and Cybersecurity at the German Federal Ministry of Finance. It's really good to have you with us, Dr. Lange. I think, first of all, I just want to ask you, how are you doing? How are you enjoying the GFF?
Good morning. I'm enjoying it very much. I had a night flight into Mumbai, and then in the morning was basically catapulted into this huge event. It's a bit overwhelming. There's so much happening here. I had to walk through the booths. I discussed with some fintechs. I had bilateral talks. I listened to the Indian finance minister revealing her inspiring vision of fintech in India. So I'm taking lots of inspiration home to Germany already after day 1.
That's amazing. It's good to hear. And I think these festivals, that's exactly what they're for, right? It's so that you can connect with as many people as possible. And this, we do really find ourselves at the next frontier in payments and digital money, whether we're talking about CBDCs, retail, everyone's talking about payments being quicker, faster. Honestly, I wonder how you manage margins on that. But the question is, how does Germany see all of this, and by extension, the EU as well?
I think Germany's vision for our financial market is quite aligned with India's vision, actually. We want financial markets to be fast, to be efficient, to be safe, and to be inclusive. And we think that digital finance and fintechs can be a huge help in achieving that goal. We want our startups in Germany to thrive. We are the 4th largest fintech market globally. We are the largest fintech market in Europe, and we want to build on our strengths and create an ecosystem where fintechs can find funding for growth and can find talent also to grow and to build good things.
Absolutely. One of the biggest questions around many of these festivals, and we don't just have the GFF, there are a number of festivals that take place around the world. It is always around digital currencies. And obviously, we're quite curious to get your view on the idea of a digital euro, the timeline, what some of the trade-offs might be. You know, you mentioned safety, privacy, traceability. These have been one of the big areas that have been questioned. And also, how do you integrate these ideas with your existing legacy banking systems?
Yeah, in Europe, we're currently building a CBDC, the digital euro. The central bank system is building it, and the member states and the regulators are currently negotiating a legal framework for it that gives a frame on how much privacy there should be, on how resilient the project should be, on also remuneration for the banks that distribute it. Germany is very actively engaged in it and very constructively because we think it's a very important project also for our European sovereignty, because we want to offer to our European citizens a truly European payment initiative. We see payment as a public good, and we think there should be an affordable and resilient European means to pay throughout the whole Europe. So the idea is that me in Paris, I can buy a coffee with a digital euro without going through, for example, an American credit card to do so. And we hope to be finalizing the negotiations in the Council this year, if we're lucky. And then we have to find agreement with the European Parliament, and ECB, European Central Bank, is already setting up the project. So I hope you might see the European CBDC in a few years' time on the market.
Dr. Lange, I'm not going to lie. I travel in Europe quite a bit, and I have to say that if I could do those payments more seamlessly, that would be a great thing. You mentioned when we spoke earlier that it's been quite overwhelming. You've hit the ground running in Mumbai, speaking to various different possible stakeholders, or actually speaking to those from who you can learn. What I'd love to know is, what are the learnings that you're hoping to pick up in that scenario as you roll out CBDCs, or you're trying to learn more about how to do this well? Who is it in Mumbai that you would like to talk to, and why?
What I think is most inspirational for me about India's journey into digitalization is the digital public infrastructure that was set up. And to me, it seems like it's the rails really which the private sector, the startups and fintechs can use to scale quickly into this huge market. What I'm talking about is digital identity, is UPI, is the India stack. In Europe, we do not have such a culture of a public digital infrastructure, but we are now following a bit India's example and building it. We're building a digital wallet that can be used throughout Europe, and we're building the digital euro. And so I'm very curious on your experience on how to include the private sector, on how to roll out these huge projects. And I had a talk with the CEO of the Reserve Bank of India Innovation Hub yesterday, and I got the impression that India's journey is not finished, and there are many exciting projects still in the pipeline. And I would love to learn more about such projects in the following days.
Yeah, it's quite remarkable. We often get the message that India's journey with this is only just beginning. So can you imagine how far that can go? I want to get into talking a little bit about AI, augmented intelligence, responsible innovation in finance, because with all of these developments, trust is going to be really important. The safeguards are going to be really important. How do you envisage balancing innovation and then consumer protection when we talk about this next generation of payment systems?
Yeah. I think for us in Germany, AI, it's not just a technology trend. I think it's a strategic priority to be one of the global, or become one of the global AI players. We have, with the AI Act, a comprehensive framework to regulate AI, to make it safe and trustworthy, and we're currently working on using it in a practical manner that does not stifle innovation, but that shows clear boundaries to use cases of AI that have high risk or that we do not want to see on the market for ethical reasons, and to make it practicable for the enterprises that use AI, and to set up a clear supervision so that AI is supervised and can be trustworthy for the consumers. And our vision is really to have an AI made in EU that is trustworthy and that is like a quality label. We also see that India is taking global leadership on AI with the upcoming AI summit in Delhi. And I think also there we have things to learn from India on how to use AI not only for more efficiency in the market, but also to use it as a tool for more inclusion.
Yeah, absolutely. On the subject of cybersecurity, which falls into your remit, what are you hoping to get in terms of exchange of information, exchange of experiences in these meetings in India? So, for example, governance frameworks. This is all in a very, how do we say this, in a developing stage. What is it that you envisage it will take to get to a more robust situation on the cybersecurity front? Because as much as we develop, so do those who want to take advantage of our exposure.
I think that in the financial market, we're so interconnected globally, and we're so digital far more than other parts of the economy. So that has great chances, but it also poses big vulnerabilities. So for me, cybersecurity is a truly global issue. In the EU, we have a new regulation framework. It's called DORA, and it makes the financial sector operationally resilient. It imposes cyber drills and pen tests, and it gives the supervision a full picture of what is really happening on the cyber incident front. And for me, it's very important that different countries connect on these issues and work together. We see promising work, for example, in the G7 Cyber Expert Group. We also think that it's an issue for G20 because I think only if we exchange information and if we have a good plan how to combat these threats together, we will make our system secure. And the more digital we become and the more big visions we follow about a globally connected financial system, the more important it will get.
Dr. Langer, I have to let you get back to it very, very soon. I know you've got lots of meetings probably slated and panels to speak on and things like that. But before we go, I just wanted to ask you, what are you most excited about achieving at the GFF while you're there?
I think it's really the connections between the people you forge. I mean, in Germany, we're following India very closely. We have a strategic partnership. We have a focus on India. We have biannual government consultations. But it's a different thing to be on the ground and to really see how vibrant the market is and to really experience firsthand with the people who've done it how much has been achieved in terms of inclusion, of digitalization in a mere decade. And to me, it's inspiring for the challenges we have in Germany, which are a bit different. But I think that the energy and the wish to change with which India addresses these challenges is something I can really bring home. And so I hope to find a lot of inspiration and talk to a lot of different people. We have a roundtable with Indian startups coming up at lunchtime to really try and forge business relations and to answer questions on the European market. So lots of face-to-face talks I'm looking forward to.
I'm absolutely sure. Well, we hope that you get everything out of it that you're looking for. Thank you for your time, Dr. Friedrich Langer from the German Federal Ministry of Finance, who is at the GFF in Mumbai. Thanks again. All right, Indian markets are coming online in what has been a very big week for IPOs. Let's take a look at the Nifty right now, very much in the green. We are up just over 0.2%, holding above that 25,000 level. It's been a really interesting handover from Wall Street because actually Wall Street, all the major markets were down and that hit other Asian markets, but the Nifty certainly holding its ground. Plenty of domestic news for investors to wrap their heads around. And that is all the time that we have today on Inside India. Stay with us here on CNBC. That's lots more coming up. Bye for now.